Hey, what's going on? What's going on? All right, I'm stopping in to see how my people are doing. I am away traveling, but let me put that on. I want to stop in and just talk to you for a minute. All right, so I'm gonna wait for you guys to come on in. All right, I definitely have something that I want to share with you all, and let me pull up my comments so I can see that. I'm just giving a minute for you guys to come in. And I want to talk about something very brief. I am traveling right now, so yeah, I'm. What's going on? I see you guys coming in. I want to share something that is very, what I would consider very invaluable as to the day that we're living in, and the things that we need to be on the lookout for. What's up? Good evening. God bless you guys. I'm traveling, so I'm in a different space at a different place. Don't have my same setup, don't have my same camera, but I still wanted to come on just for a few moments and rock with you. I want to share something with you that I think you guys need to hear. All right. So, good evening. What's up? What's up? I know it's a little later. I'm in a time difference right now. Listen, I had to share this because I found out, y'all not gonna believe this. Somebody actually used Klarna, or there are people who are actually using Klarna, buy now, pay later. Okay. They're using it for food. There are Uber Eats workers that are saying that people are using Klarna to buy food. Now, think about that. Like, there are people who are financing a cheeseburger in 4 easy payments. Okay. And I heard somebody joke about this and say, like, pretty soon people gonna be tipping people with Klarna. Buy now, pay later for for my tip. I said, is that, yes, Kara? Is that where we're living? Is, I mean, we gotta. We're now financing our food. Okay, it's not bad enough that we're financing all of the other crazy stuff that we got going, but now we're financing food. Okay, and it's not about the burger, it's not about the food. It's just a perfect snapshot to me of what I keep addressing, and I'm talking about the consumer mindset. And and this consumer mindset is, it's really going to widen that wealth gap every single day. Okay, now here is the twist, and here's what I want you to know. And I will share with you a couple of AI investments that you could potentially make, because I'm going to get there in a minute. But I had to share this because that's nothing but crazy debt. Absolutely, you financing it. The problem with that is that, I don't know if you guys know, but Klarna just IPO'd, right? So Klarna, you can actually invest in Klarna as a business now. Okay, right? It just went public, and I bought some stocks. So I don't know if y'all bought some. It's only around $45. I have some Affirm and some Klarna, $45 a share. So let me just ask this simple question. Like, if somebody had enough money to finance a meal, why not skip the burger and buy the company? Why not skip the burger and buy the company? Why not own the business that's collecting all those interest payments instead of being the person paying them? And I'm telling you, this is why I know some of y'all are shocked. Y'all like, what? Wow, yeah, like, this is crazy. A lot of people honestly believe. Hold on, let me just back up and say this. It's just a complete mindset breach when it comes to investments. Okay, right? So we're financing stuff. Instead, we could be putting that little money here. But I'm telling you, I'm about to get it right now. Yeah, like, it's just $45 a share. Okay. Now, let me ask you a question. If people are financing they burgers, where you think a business that's in the buy now, pay later is going to be years down the line? See, but again, there's going to be the consumers, there's going to be the people who are like spending. All people are concerned about is, how can I afford this right now? They're not thinking about the future. And I think I saw a comment last time when I can't remember what I was talking about, but I saw a comment last time when I was just talking about like the wealth transfer, and how the gap is also going to be widened. and somebody was saying don't like the 80 or the 90%, or don't the small 5 to 10% get rich off of the sweat and the tears of the 80 or 90%. And I said, well, no, they're not getting wealthy off the sweat and the tears of the 90%. They're getting wealthy off the decisions of the 90%. Meaning, if you are a consumer, yes, you're going to make an investor wealthy. Okay. And you're not going to get wealthy because inflation, you're not going to outpace inflation. I think I was talking about the difference on my last video. You got to see it if you haven't, between capital and labor, and how in the future, capital is going to outrun labor. You're not going to be able to make enough money through your time, through labor. And the reason why is because inflation is going to eat all of that up. Okay. Thank you, Sean, that says, I'll be looking forward to watching your videos. Right. So there's a mindset breach. And one of the major things, I have a lady in our group, and I was so proud of her because we work on the mindset, because this is the thing that's holding people back. But she bought her first, and she opened up her own brokerage account, because some people, they have investments in their retirement or whatever, but all of that is locked up, meaning they don't have options. Like, you got to have options. Like, if let's say there is a crash or things drop or whatever, you don't have any options. You just got to watch it go up, watch it go down. But when you learn how to navigate your own brokerage account, you can come out, on top. And if there's a huge drop or whatever, a huge correction, you can buy back low. You just have options, right? You can take profit along the way, and you can move that money and then make other investments, and you can move and shake, and you can just do a lot of different things. Okay. So thank you so much, Steve. Said excellent points made. So, but the one thing I think that stops people is because they really think that they have to have big money to own pieces of a business. I just told you Klarna was $45, but somebody would rather take their money and spend it on food and then pay somebody more money to borrow money to put food in their belly. That, first of all, that's not a huge like need. I mean, you could really cook your own food. You know what I mean? Like, a lot of fast food is taking a lot of people's money away from them, because they would rather, they would rather just, get quick food, processed food that's going to make you sick and unhealthy anyway, versus just make your own food. Me being a health coach, I see people who are killing themselves through processed fast food, seed oils, all of this processed junk, where really you shouldn't be eating all of that processed junk, because you're killing yourself anyway. You're going to wind up with high blood pressure. You're overweight. Your belly is, you know what I mean? Like, you can't get rid of your belly fat. You're overly stressed. You know what I'm saying? You're not getting enough sleep. You're not moving a lot. You're sedentary, and you can't outwork that level of stress on your body. You know what I mean? So it's just a big spiral, out of control kind of thing. And then on top of that, you don't have any investments. That's going to stress you out even more, right? So anyway, I keep saying this because I don't want you to think that this got to be $1 million portfolio or anything. You will be surprised at how much money you can make if you make small, consistent moves. You can buy fractional shares. You can own slices of companies. You don't have to even have the whole share. I know psychologically we do want to own and we want to have position, but if you don't have that yet, just put the little that you do have. Because when you're looking at Netflix or, share stocks that are, $1,000 plus, or maybe 500 plus, and you might say, I can't buy a whole stock of this. Well, you can buy fractional shares. And I keep saying that. Thanks, Shaylin. Shaylin said, I'm happy I caught you live. Hey, from Memphis, what's going on? You dropping gems. What would you say to someone who has just $100 monthly to buy stocks? Put it in stocks. I mean, that's a nice amount of money to have to consistently put into stocks, whether they're ETFs, dividend stocks, growth stocks, great companies, and I'm going to share a little bit about the AI, because I think we should all also be investing in some AI companies. Now, with that being said, interestingly, Klarna just cut their workers in half. I think they had like 7,400, 7,200 employees down to about 3,000. They basically cut in half, and they said their performance improved. Why is this? Simple. artificial intelligence, AI. And let me just say this, nothing I share with you. I'm not your advisor. This is for educational purposes. I'm not telling you what to buy, hold, or share. This is for educational purposes only. And these are things that I would do. Okay, this is for educational purposes. But Klarna, they cut their workers in half, and now they're functioning better. When I tell y'all, there are some people that's going to be in some really bad positions, in the sense that, first of all, AI is stealing people's jobs. Then you don't have investments. Then you have inflation going up, housing and affordability going up. Then on top of that, you're not taking care of your well-being and your health. I mean, it's just it's going to be a collapse at some point of effect that's going to happen to you if you don't make the changes that you need to make right now. All right. Um, what method or tool do you recommend to buy these very shares? That is, say, to buy shares. What do you mean? Give me that a little bit more specific, Cav. Right. So, hey, from South Carolina. So there are companies that are going to do more with fewer people. So I want y'all to understand, because AI is quietly running the show behind the scenes, and this ain't a one-off story. This is everywhere. People are like, how can I cut back and save money because of AI? Right. And so, okay, then that lets us know we need to be investing in some of these companies, right? So, when most people hear AI company, let me just help you understand this. They're picturing, when you think of AI, for some people, they're picturing some like tiny robotic startup or some science fiction lab. I already know it. Like, they think something like that. But I'm not just talking about some of the biggest non-tech names that you use every day, essentially are AI businesses. For example, you may not know this, but like Uber is AI. Why? Because some people think Uber and Lyft are like, and Lyft is doing really well right now. They think that those are car companies. Those are not car companies, y'all. This is not enterprise. They are logistic algorithms. AI routes the drivers, set the prices, predict demands. Also, Amazon. Some people, oh, Amazon is a store or no, it's not just an online store. AI runs their warehouses. They forecast what you're going to buy. They even power the cloud servers thousands of companies use. Okay, these are AI driven companies, right? So you got to look at AI a little bit differently, because when you book a car for Uber, whose car is it? That's the person's car they using. They using their own car. This is an app. This is an AI. This is AI technology, right? Or they got it even where they're renting cars from Uber. I mean, it's crazy. And people are renting cars to do the work. You know what I mean? So it's so now they got other ways to pay, and they're connecting with all kind of. They're connecting with trains and planes and all kind of. I think they're connecting with planes, but I know they're connecting with trains and stuff, and all. They're about to probably be connecting with boats and I don't know. But the sky is the limit when you're talking about artificial intelligence. I'm not sure all the breakdown of what goes on in their company. I know right now, they got the food service and they got the car service, but there's a lot of other stuff that's happening. And because their server has so much database, you do have other services that are probably going to start contracting with Uber, because it's like, hey, we got the startup, we got this product, we got whatever's happening, whatever transportation, whatever needs to happen from A to B or whatever that looks like, but we need now your server, your data. So now we need to license this and let's team together. I mean, it's powerful. Okay, so I want you to know that a lot of these companies that you think are different type of companies, they're really AI companies. Okay, and I say that to say that you want to be invested in AI companies that are scaling, right? Okay, so I want to share that part. So stop. Number one, stop thinking that you need a fortune to start. I want to address that. You don't need a fortune to start. Okay, and then look for the hidden AI plays, right? Where do you think these companies are going to be down the line when they're progressing like that? Okay, it's not always the obvious stock. It's the companies where AI makes them more. It's sometimes you got your regular companies that you know, okay, these companies are going to do good. But sometimes there's companies behind the companies that make the companies function, if that makes any sense. And there's some AI companies and AI technologies that make the star companies that you see every day more efficient, more profitable every single year. That's why I love NVIDIA, because people have to use NVIDIA chips for things to happen. So that's how I want you to think. It's a lot of stuff going behind the going on behind the company, where the company can't even operate if you don't have this other company, this AI company pushing it. Okay. And then the last thing I want you to know is that you have to decide which side of the trade you want to be on. Okay. Do you want to be on the side that's paying 4 installments for a burger? Okay. Or do you want to be on the side that's collecting a cut every time somebody else do that? Okay. So if that's working off your sweat and tears, the only tears you're gonna have is the tears of making bad decisions, because you don't have anything when the future comes, or you know what I mean? Like, so it's not, I know there are some people who feel like the wealthy gets wealthier, the poor gets poorer. We got to just be accountable and stop thinking around stuff like that, and stop blaming. Ain't nobody to blame. Okay. We're here. We're getting the knowledge, we're getting the education, we're learning. We already know what world we're living in. We see it happening in real time. We see what AI is doing. We see what's going on, So we just got to make decisions. We see what's happening with inflation, right? We see it in real time, but now it's up to us to make that decision. Because I can guarantee you, if I fast forward 10 years into your life, anything that is going on that is prohibiting you from being wealthy and successful, it's your fault. Nobody else's. It's going to be your fault. Fast forward 10 years from now, it's going to be, you can't tell me 5, 10 years from now, when you're getting the knowledge, you're getting the education, you're learning, and you have decisions. You ain't got to be a millionaire to start investing. You can start investing $10. All of these little moves, and you still want to finance and pay now, or buy now, pay later. You still want to consume. You still want to go out and spend all your money on everything, on clothes and all of this other stuff. A lot of times beneath the surface of all of that emotional spending is insecurity, is trauma, right? This stuff goes way back. Okay. And so these are your decisions, and you got to know that, because you're going to be the one that's accountable. And you can't look back and say, oh, but I didn't know. Oh, but this person, but the wealthy, but the taxes, but this party or that party, they rules and they laws and they politics, and nobody's fault, you guys, right? Nobody's fault. You know what God has called you to do, and it's to be the lender and not the borrower, to be the head and not the tail, to be prosperous, even as your soul prospers. And so we got to take accountability for that. Really quick, there are two ETFs that, thank you so much, Jakara said, I agree 100%. There are two ETFs that kind of play a role in the AI field, and that's ROBO, Global Robotics and Automation Index ETF. And then you have another one, AIQ, that's Global X Artificial Intelligence and Technology ETF. Those are ETFs that you can look into. Again, I'm not telling you what to buy, hold, or sell. This is for educational purposes only. And I'm not your financial advisor. Investing can be risky. You can lose everything. Robo does have higher expense ratio, meaning the cost of running the ETF than some of the other ones. So the returns can be tempered by fees. But then AIQ is more of a broader, which means it might be less volatile than some of the other super focused ones on automation or robotics only. But they are both good. They could be good long-term holds. Just do your due diligence. I'm not here to tell you again what to buy, hold, or sell. They're best if people are okay with waiting several years. So it's a long-term investment. Okay. And you got to you got to let the trend play out. We're still on the front end of a lot of AI. Okay. Just like how it was with the internet and, social media and just stuff like that. Right. So, Robo, ROBO, and AIQ. Okay. Where can we start small to invest? I would like to invest. Hey, Kim, you can start with a dividend. I personally started with dividend stocks, SCHD, or growth stocks, meaning companies that you believe in, companies that you believe will be around, for the next 5, 10 years, that will grow. Um, and then you can also do like ETFs, like VTI, VOO. Those are good. ETFs are more safe. They're not as volatile. If you're looking for individual companies, you could be looking, especially tech stocks. They are more volatile. They have a little bit more risk, but they also have a lot more reward on the other side. uh AI is going crazy, somebody said, and it's so true. It's going crazy. And like I said, you can be stuck on I'm just going to continue to buy, and then, or buy now, pay later on everything. Or you can just start slowly taking little steps like a baby would. It doesn't matter. Like, we're not talking about, you don't have to leap, you don't have to fly to the moon tomorrow. But I think that's what people think they need to do, right? And I'm telling you, that's not how I did it. Not when it comes. I tell people all the time, my large amounts of money went towards real estate. When it came to investing in stocks and businesses and crypto, even silver and gold and precious metals, it was really small, consistent steps that I just kept taking. That was it. And then you look up, and then years down the line, you're like, wow, oh man. And then when you continue doing that, there's a compounding effect. Things are growing. Then you reinvesting your dividends and your money and your growth back into the business, and you just hands off. Like, I'm not even taking no profit right now. I'm not saying you can't take profits along the way, or whatever. That's more for coaching. Everybody got a different game plan. You do have to have a game plan. And that's why I always invite people to our community. You can click the links below for that. Oh, make sure you like this video. I didn't say that. Like the video, subscribe if you haven't been subscribed. I'm out of town traveling, but I'm here committed to you guys. So I'm like, hey, I got to come on and, be with the people and share some information, share something valuable for you. But click the link below if you're interested in our challenge. A lot of people just don't have a game plan, and you really it's the game plan that makes all of a difference. Hey, I'm here learning. I'm with my coach this weekend, or this entire week, getting a game plan for my business as an entrepreneur. I believe everybody needs to be empowered. Everybody needs to, have a coach, have somebody there who can help them with their game plan, who can help them reverse engineer back into right now, today, and know, what do I need to do to get here? You know what I mean? So that's where I am. I'm out of the country, actually spending, like I said, an entire week with my coach. I'm at a entrepreneurial summit, and I come here every year and really work on sharpening my game plan for my vision, my vivid vision, long term, short term, all of that. And so that's what I'm doing here. But I'm still here, right here in the hotel room, feeding you guys. I'm probably going to get some. Somebody said peace and chicken grease. I was going to say I'm about to go get some chicken. I'm hungry. I haven't eaten in a little bit. You can also look inside ETF and look for individual stocks to consider. Yeah, the thing about ETFs is they combine a lot of different stocks at once. Okay, so there's some ETF stocks that are heavy on certain textile. Okay, Amazon. It might have Tesla, it might have Nvidia, so there are ETFs that will combine these different companies together, and that's what makes them a lot safer for some people, because it's not just one company that you're banking on. If that company does bad, the whole ETF don't sink down. You know what I'm saying? They can take that company out and replace it with another one. So they typically perform pretty well, and there's not a lot to the downside, like not a lot of volatility, and it's just a slow, consistent growth. And so when you're looking at the trends for 5 and 10 years, you're always going to see ETFs be like really safe plays, growth ETFs with growth companies. That makes a difference. Okay, with growth companies. Learn and keep learning. That's right. That's the name of the game. All right. I love preaching ETFs because people can be overwhelmed. Yes, yeah. ETFs are very, like I said, safe. They might hold your favorite several companies in there. And there's as a matter of fact, I did a video on my top 3. Go back and look at it. My top 3 tech ETFs, and they hold a lot of the your great Apple, Amazon, Nvidia, really successful growth companies. Go back and look at that. I won't go over it right now, but I did share a video on that. All right. And yes, I love that comment, Boss Ball. I think it depends on your age. Dividend ETFs or stocks don't grow, right? So if you're older or close to retirement, I'd go with dividends. That's if you have a large sum, but just starting, don't do dividends. And that is actually true, because I've said this in my one of my last videos, I said, I mean, you know, everybody got a different game plan. Let me just say that. But I did say in my last video that, or one of my videos, I said I tend to like to go with growth stocks a lot more, because I plan on being around for a while. So if you plan on being around for a while, if you're going with a growth company, you're going to make a lot more probably to the upside, you know. So with dividends, they're not they're there to allow large sums of money to make money. So it does depend on your age, or if you were close to retirement or whatever. If you're closer to retirement and you don't feel like you're going to be around for a long time, then maybe you may want to do more dividends, okay, than growth stocks. But I plan on being around. So if you're younger, I love the growth stock play. I love investing a lot into growth companies, companies that's going to grow, that's going to really appreciate. Okay. So, but you know, I just say it to, you know, but I still love SCHD. And I still tell people to invest it somewhere, because especially if you're not in doing any investing, and then hey, Percy, thank you so much. Thank you so much, Percy, for that. I appreciate you. Uh, if you are, you know, SCHD is very affordable. It's like $27 or something like that. And my thought is hold it into some kind of appreciating asset. Okay. Now I do all of it. I like dividend stocks, dividend ETFs, dividend companies that pay a dividend. I just reinvest it back into that company. And I love growth stocks. Okay. But I love growth stocks probably a little better because I plan on being around for a long time. Thank you, Kimberly. She said safe travels. Again, thank you so much, Percy, for the generosity. I appreciate you. Your base and portfolio, in my opinion, you be 50 to 75, if not 100% ETFs. Yeah, I believe in a strong base of ETFs because it's safe and they're not as volatile. So I do think you got to have and I love cryptocurrency as well. Me personally, I love cryptocurrency. I love the exposure. They got cryptocurrency ETFs that you can get involved in as well. So that's becoming a little bit safer if you like, okay, I don't understand the cryptocurrency, but they got crypto. Bitcoin got a cryptocurrency. I do have Bitcoin ETFs as well. Okay. So I love my Bitcoin ETFs. I think they're going to do great in the future. You know, these are some of my long-term Simple Wise say, I just love this lady. Thank you so much. I appreciate that. So anyway, I was on here. I'm rocking with you guys. I just want to come on for a minute. Somebody said, yes, tech, blue chip right now. Tech and blue chip companies. Absolutely. Absolutely. You are right about that. I did see another question way back. I was trying to see, somebody was asking me about cryptocurrency. I think, what do I personally think about crypto? I love crypto. Okay. I love crypto. I'm a bit bullish right now. I'm not saying that crypto can be risky. I absolutely love Bitcoin. I love Ethereum. Okay, so I have XRP. Okay, now I don't know about these people talking about X. I don't know. I don't understand the people talking about XRP gonna get to $1,000 this year and all that. I mean, no, I just don't. I don't buy that at all. So I'm just trying to figure out where they're getting their math and stuff from. Now, I don't know. I'm not talking about the future. Okay. I have some long-term cryptocurrency and future-centered crypto. Okay. But I do still believe that there's going to be some ETFs that's coming out. I'm hoping, you know, Solana, XRP, these ETFs will definitely do something for the cryptocurrency bull run. I am positioned just fine. And let me just say this, because somebody asked me about XRP. I got enough XRP. I don't need to buy XRP nowhere over $3. Y'all, folks XRP go to a high $3.80. Now people want to start banning and stuff. XRP was 20 cents. It was 30 cents. It was 40 cents, 50, 60, 70. It even retract and hit highs and then came all the way back down. I mean, why do people wait until the top to start buying cryptocurrency? Like, no, my last buy was like at $2.69. Like, so I don't need to buy it. I have enough. Okay. I have enough. I was buying crypto at the bottom of this season. I feel like I kind of don't even want to put my money anymore in there because I have enough for the bull run to take its place in a sense. The only thing that I do continue to buy is Bitcoin. I buy Bitcoin every day. Okay. I buy Bitcoin every day. I might buy some more Ethereum, okay? But I got even high risk plays. I got dumb cryptocurrencies, like stupid ones that might do well and might not, but I don't care. I'm all for it. I got the solid ones that are actually utility, and then I got the stupid ones that may go stupid crazy or may not go stupid crazy. All I need is one. All I need is one to go stupid crazy. Okay. In your opinion, what effect will the Fed decision to lower or raise rates have on the market? Are you looking buying or selling in anticipation? Again, I'm not buying. I bought at the bottom. I was buying in April when there was the crash. So I'm not looking to buy a whole lot more right now of crypto, my long-term crypto. Let me retract that. Now, if I want to swing something, yeah, I'll do that. But I'm in and out. I'm talking about I'm not buying any more of what I have in place for this bull run is solid. Okay. But yeah, I will do swing trading. Okay. Um, and yes, I do think the Fed's decision to lower rates are going to make a difference. I do. So, but it could be a, buy a rumor, sell the news kind of thing. Yeah. So we'll see. We'll see what happens with it. But we're looking to see what's going to happen if he's going to give us 25 point, 50 point rate cut. If it's going to be one, two, or three, I'm hoping two or three. And I definitely, but I really think the ETFs are going to matter. I think we need some ETFs in the mix of this. Okay. So we're just seeing. I don't have a magic wand. I don't know. I'm just waiting like everybody else, but I'm not that person chasing the top. And that's what a lot of people are going to do. They're going to be chasing the top. I'm not chasing the top. I said I don't want to buy XRP over $3. I have bought it when it was down and out. Okay. So as with a lot of them, as with Ethereum, when it was down to 1900, 2000, you know what I mean? Bitcoin, like I said, I continue to buy. I've been buying it since it was like 15,000. I have Bitmine. I just made a nice amount on Bitmine. I did a swing trade on Bitmine. Bitmine, I mean, it's gonna go with Ethereum in a sense. So my thing is everybody's different. Again, it's all about the game plan. I did buy some Bitmine, but I do some stuff that I buy. I still have stop losses. I still have stop losses because I I like to get my profit, and then if it goes back down, I just like to rinse and repeat. So it just depends. But I did do a nice swing trade on Bitmine last week that just went crazy. I love it. So yeah, I mean, all of these stocks can make you money. It's just what the game plan is. Is it a short term game plan? Is it a swing? Are you in it for the long run? I have some stuff where I have long-term stash and short-term stash. It's just the game plan. Everybody got a different game plan, and you got to know what your game plan is, and you got to stick to it. And then the last thing you got to do is what Warren Buffett said: don't lose money. Two rules. The first one is don't lose money um, with investments, and the second one is don't lose money with investments. How can you not lose money? How can you limit your loss? That is the question of the day that you got to always work on. How do I not lose money? But I keep doing this, but not lose money. Okay. Because people have risk behavior patterns and they be chasing highs. And so I don't want to lose money by chasing highs. Okay. I want to buy low. I want to buy when. So one of my plans are okay, buy when people are scared. Okay, so I'm buying when things crash, when they correct on red days. And then if it keeps dropping, I just dollar cross average. Okay, like so everybody, again, you got to have a game plan and you got to stick to it. Okay, so there's a lot I could say say about that, but I'm just saying it's all wrapped around how do I not lose? You know what I mean? How do I keep myself from greed? Because a lot of people lose money because they're emotional and they're greedy, right? Anyway, 25 price in if it hit point 0.5 or higher, the market gonna blow. Yeah, I mean we'll definitely see. There's a part of me that feels like, yeah, it could be point 0.5, right? Lower. It could be point 0.5, meaning he lowered the rates by point 0.5 or higher. But you also got to wonder if the markets are gonna, sometimes the markets react really weird. Are the markets gonna be like, if he go higher than that, like he must know something we don't know. Like what's really going on with the economy? And will people get scared? You know what I'm saying? At the end of the day, we're gonna see if there are gonna be people who want to buy, but the buyers have got to be stronger than the sellers. And that's the question. Does the market get super scared if he goes too high? You know what I mean? Like what he looking at that we ain't seen? No, something ain't right. Or yeah, does the buyer step in and say, I feel more safe, I feel more secure, that we're getting the rate cuts, so the buyers start to outweigh the sellers. I mean, again, sometimes you don't know, but we'll see. Okay. What I do know is probably, or I don't know, but I suspect at some point, I'm bullish. I'm cautiously bullish until otherwise, as far as going into quarter, the end of this quarter. Okay. So yeah, I had Bitcoin at 16.9. That's awesome. Had 3 sold at 3,200. Oh, well, at least you had a profit. It's all good. 2,400 shares of GBTC at average of $18. Buy and hold is now my strategy. Love it. Love to hear that. Love to hear that. I love it. I love it. Absolutely. Absolutely. You got it going on. You got it going on. All right. One last thing I'm betting on is time is coming. Okay. Yeah. Hey, if you betting on the stocks, and you're making money off of what you choose to make money off of and invest. Yeah. Like we're all trying to, we're all trying to make wise decisions as we move forward. Okay. So, and you said, yes, fractional shares of Bitcoin. Yeah. Fractional shares of Bitcoin for sure. That's good. I love your game. You got it. You got a good game plan. Facts. Sell off on Wednesday, or are more people or institutions buying in? Yeah, we got to wait and kind of see that, right? Are more, I know one thing, if it do sell off and if there is a correction or if there's a drop, hey, I love the drops. I love the dips. I buy the dips. Okay. That's what I do. All right. So are you buying the dip or are you buying on top? That's the question, right? Are you buying the dips? Are you buying when people are afraid and they selling off and things are crashing and all of that? Or are you buying on top? If you are, you need a better game plan if you buying on top. Okay. And maybe you don't know where to begin. But again, we do coaching and we work through game plans. Guys, it's about this. It's about this first. Okay. It's about here. All right. And when we get that together, man, we'll get our physical body. We'll get our finances. We get our relationships in order. We'll organize our life in a way where we can really fulfill purpose. And so that's what it's all about. All right. Make sure you like this video if you have not already. I'll be back on to rock with you guys. I have a really packed week this week, so I'll see what's ahead if I can get back to you. But if it go too high, it could drop. Shake them out. Yeah, absolutely. Because we got to find out who, people are. We got to know who people are going to take profits at some point. But when there's profit taking, are the buyers outweighing that, or is the profit taking outweighing that? So we just got to wait and see. But I'll tell you one thing, I can make money going up and I can make money going down. And so can you. You just got to have a game plan. So if you don't, make sure that you hit the link in the description, check out our challenge. We get our mind, our body, our finances all right, because it's everything is empowered by this right here. You know what I'm saying? The main source is your intelligence, your brain power, your capacity to make decisions. All right. Your mindset, it's all right here. Right. And then we get your heart right too, your emotions, because a lot of people are making crazy decisions based off of those emotions. And we got to get that settled as well. All right. Got your energy drinks today? Yes. You got to let me know how it is, Latrice. I put that link in the description as well. I have some amazing energy drinks with some adaptogens. And I love mixing adaptogens with the energy, clean energy, all clean ingredients. My favorite energy drink. If you are interested in that, click the resources in the description. I got some great stuff for you guys. So check out the descriptions. Make sure you like this video, subscribe. If you have not, share this video with someone who needs it. And I will see you guys next time. I'm about to go get something to eat. I love you guys. Thanks for rocking with me, and I'll see you next time. All right.